All right, everybody ready to go? Okay.
We're ready.
Okay. Good morning, everyone. It is Wednesday, November 27th, 2024. This is the 10 a.m. regular Board of Commissioners meeting. I will call this meeting to order. And we do have a quorum, Commissioners Jacobson, Commissioner Hall, and myself. Item 4, adoption of the consent calendar. Quite a few items. Commissioners, anything to highlight, poll?
The only thing I was going to say, both of you look at our consent calendar, Chair, and as well as our agenda, as we are coming down to the end of the year. So there are lots of ARPA contracts.
Okay,
So thanks, everybody, for working on
getting it
those.
done.
Yeah.
All right. Okay, Commissioner Hall?
No,
Okay.
I'll make a motion
Thank
for approval of the consent calendar as submitted.
I will second the motion.
Okay, all in favor, please say aye.
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 Okay, motion passes, no public hearing. That moves us to decision and action. Item A, we have a presentation of the 2022-23 audit and plan of action. And Administrator Johnson, is Don Ewalt virtually with us?
Yeah. We will just give us a moment
Okay.
to get organized.
Yep. Deanna Gravel as well, and Jane Welch, everybody coming out? Yep. Good, okay. Everyone. Dawn, can you hear us and maybe just give us an audio check?
Good morning. Can you hear me?
There, we've unmuted it.
We cannot hear you, Don.
Okay.
Yeah, I'm trying muting Dawn. Looks like he's going for it.
Let me see if I can get a
You see
particular.
it- I can see your mouth moving, so we know you're trying there. Okay, stand by.
How about now?
We hear you.
There we go.
Okay, great. And you can see me okay?
We can.
All right.
You can see the screen fine.
Very good. Very good. All right. May I also, I do have the ability to share my screen, but
We probably need to introduce this.
Yeah,
item
Dawn, just-
first.
Yeah, let's just do introductions and set the stage here. So Administrator Johnson, go ahead.
Thank you, Chair, Commissioners, Tim Johnson, County Administrator. So today before you is an action item regarding the 22-23 audit and a plan of action. The question before you is, should the Board of Commissioners accept the findings from the 22-23 audit and approve its plan of action? We're going to go through a two-phase process here. First, we're going to turn this over to Don Walt with KDP auditors who performed this audit for us. He'll walk you through that process. You can then take questions or ask questions of him. And then the county treasurer, acting county finance officer, and myself have a short presentation that we would like to go through with you all, and then we'll take Q&A after that.
Okay.
Thank you.
Okay.
cool. Well, thank you for having me today to report the results of our audit here. Appreciate your time, and I appreciate all the work that your team has done to get this. I mean, you've had a couple of audits come fast and furious probably in the past 6 months, and so it's a lot of extra work that they've done and on top of their normal duties. Just a little bit of a background about myself. So my name is Don Ewalt. I am with KDP Certified Public Accountants down in Medford, Oregon. I've been with the firm for about 7 years, since 2017. Focus specifically on municipal audits as well as not-for-profit audits. Prior to that, I was with a national firm out of Dallas, Texas. It was called BKD. Now they're known as Forvis Mazars. And in the 6 years that I was there, I also focused specifically on governmental audits and not-for-profit audits. So that's just a little bit about me. I believe I had the opportunity to meet everybody at the beginning of our audit process. I think that was back around February. So now we're concluding it and we're going to report our results. So for the first thing, I just kind of like to give an overview of Lincoln County's annual financial report, and like to go ahead and share my screen so that you can follow along. I believe that you do have the audit report in front of you, but also just so that everybody can follow along. All right. All right. So we are going to be going through the financial audit for the year ended June 30th, 2023. So that's a long time ago, but it is important that we provide these results. Here is the table of contents that I just want to give the brief overview of the annual financial report. It has our independent auditors report. This is our prime opinion. It describes the processes that we perform, responsibilities of management, responsibilities of us, results of the audit. We call it the prime opinion. It's our main opinion. There's also included a management's discussion and analysis. This is an overview and analysis of the financial statements for the year. It's kind of a narrative intro to the raw data and information that's provided by the financial statements. And then we have the basic financial statements. This includes your statement of net position, which is your balance sheet, basically your assets, the liabilities of the county, and leftover amounts, which would be net position. And then the statement of activities. This is kind of like your P&L report, your revenues, less your expenses, and then either a net income or net loss. You also have fund financial statements, which are kind of departmental financial statements, and those also include a balance sheet and a P&L. We also have required supplementary information. So this is additional information that is required by the Governmental Accounting Standards Board. We call it GASB because the county is a governmental entity. GASB prescribes certain reports to be included in the financial statements. And this required supplementary information is because of GASB. It's certain budget to actual schedules, as well as some pension and other post-employment benefit schedules. There's also additional other supplementary information that's included in your annual financial report. And these are, for the most part, more budget to actual schedules for some of the smaller funds or departments. They're also combining schedules that will link to the front of the financial statements. And then we have several other reports at the back. The county receives 4 independent auditor reports. And for a couple of different reasons. The first prime opinion report, which was at the very beginning, most or all organizations, if they get an audit, receive that report. The county receives 4 independent auditor report. The second one is an auditor's report required by Oregon state regulations. So the state of Oregon requires auditors to go in and look at the county or all governmental entities, their compliance with certain minimum standards. And so we have to go in and look at that to make sure that the county is complying with these state regulations and provide a report on it. This report's specific to the state of Oregon governmental entities. The third and fourth report are related to the fact that the county has federal expenditures of $750,000 or greater. The county is required to get what's called a single audit. And basically it's a federal grant compliance audit. And sometimes it's multiple grant programs that are audited in a single year. This year, there were 2 what we call single audits. And that term is just kind of carryover from when it was initially implemented, and we just call it that. But basically, it's a federal grant compliance audit. And because of that federal grant compliance audit, there are 2 independent auditor reports. We're required to look at the internal control processes and procedures that are in place for financial reporting. And then we're also required to look at the compliance on that grant or the grants that are tested. So those are the 4 reports that we provide. And then we also have a schedule of expenditures of federal awards. So this is what I was referring to, that the county has over $750,000 of federal expenditures, which triggers the single audit or federal grant compliance. We also have notes to that schedule. And then we have a schedule of finding and question costs. And the schedule of findings and question costs is a good summary of the audit. And so just give a brief overview of the annual financial report. And then I want to take a look at the auditor's report, because sometimes there's a little bit of a misconception about what auditors do, what we're required to do, and what are the responsibilities of an auditor, as well as the responsibilities of management. And I'll take a quick pause here just to see if there are any questions about what we're going to go over. I definitely encourage as many questions as you might have. I know that there's kind of like a lot of legalese language that auditors use. And so if there's any clarification, I'll try to do the best that I can to clarify. Otherwise, I'll just continue.
No questions from me right now.
Yeah, none for me either. Thank you.
For sure. So the first thing that we're going to do, and we'll go to page A1. And this is the independent auditor report. This is very template documentation. This report is set out by the AICPA that says this is the required standard report. At the very beginning, it starts with our opinions, and it tells you what we've audited. We audited the governmental activities, business type activities, your major funds and remaining fund information of Lincoln County for the year ended June 30th, 2023. So it lets you know what we're providing an opinion on. And then it goes straight into our opinion. In our opinion, the financial statements present fairly in all material respects the financial position of those activities, governmental, business type, major fund, etc. So that right there is an unmodified opinion, which is basically a clean opinion. And that's what the county got. What that means is that if somebody's looking at the financial statements, the information that's being presented there can be relied upon in material respects. Whenever we're looking and doing our audit procedures, we don't test every dollar. You know, if we're auditing cash and the county has, you know, just throwing a number out there, $1 million in cash, we've probably looked at 990,000 of it. But we're not going to look at petty cash, you know, the $1,000 that's sitting in, you know, somebody's desk drawer under lock and key or anything like that. But, you know, you can be pretty assured that the $1 million is not going to be misleading. So the basis for our opinion, that next paragraph, is that we have been prescribed certain standards to go about an audit, and that's what we used. We use these standards to go in and perform our audit. Our responsibilities under those standards are described in a couple of paragraphs below, and we'll get into that. Another thing is we are required to be independent of the county and meet our ethical responsibilities. So we are independent of the county. We don't have, we're a contractor. And so we're not going to be swayed one way or another. And that's why we believe that the audit evidence that we've obtained is sufficient and appropriate to provide a basis for our opinion. We do have an emphasis of matter paragraph. Whenever we began the audit, we noted that there were some adjustments that were required to the beginning balances of the county funds and whatnot. And so we restated. So basically, and I want to say it was in the regard of probably a couple of $1 million, and they were related to recording receivables for revenues earned but not yet collected for the majority, for the most part. The other item in that emphasis of matter is basically there was a new standard regarding subscription-based information technology arrangements. And this is just a fancy way of saying we're going to put IT arrangements on your books. So if you have an IT agreement, you're going to record an asset for the use of that information technology. You're also going to have a liability. The next section is responsibilities of management. So management's responsible for the fair presentation of the financial statements and also for design, implementation, and maintenance of internal control over financial reporting. Also required to evaluate whether there are conditions or events that would raise substantial doubt about the county's ability to continue as a going concern for 12 months. And there are no issues with that. This is just kind of stock information or a stock paragraph in there, but it's required. Now we get into the auditor's responsibilities for the audit. So our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, and to issue our report that includes our opinion. And reasonable assurance, it defines, is a high level of assurance, but not absolute assurance, and therefore is not a guarantee that an audit conducted in accordance with generally accepted auditing standards and government auditing standards will always detect a material misstatement when it exists. So we feel like when we do an audit that we have appropriate documentation that we've obtained, that the financial statements are materially stated. There are no errors that if somebody looked at these statements, they would say, aha, this is way incorrect. But and we provide reasonable assurance, not absolute assurance. There could be a misstatement out there that we missed. We don't think that we did, but it is possible. I would say the prior auditors have this same description in their opinion for the FY22 audit, but whenever we came in and we looked at it, we noted that there were some misstatements, so that they missed, we feel. And so that's why there is a restatement. And it gives a description that misstatements are considered material if there is a substantial likelihood that individually or in the aggregate, they would influence the judgment made by a reasonable user based on the financial statements. So if somebody looked and saw that $1 million of cash was reported on the financial statements, but in actuality, you really only had $50,000, then a reasonable user would say, this isn't right. But we think that the evidence that we have obtained supports the information that's being reported. So also in performing our audit in accordance with the standards, we exercise professional judgment and maintain professional skepticism. So we use a lot of judgment about what we're going to test in the areas that we think are important. And we also maintain skepticism. We don't just kind of take the word of the individuals that we're getting responses from. We always ask for documentation. I'm sure the finance team and people of the county are probably aware that there's been a lot of requests for information, and we use that. It's part of professional skepticism. So I was, I grew up in Texas, but I was born in Missouri, and they call it the show me state. And, that's kind of my auditor background. Okay, that's great. Now show me. So we also, the next bullet point is we identify and assess the risks of material misstatements of the financial statements, whether due to fraud or error in design, and perform procedures responsive to those risks. So there are particular areas that we consider that errors are more prone to. This would be revenue recognition. Also, the fixed assets, making sure that those are recorded appropriately, as well as fund balance. And we use professional judgment for that. And we go forward from there. It's basically just to help us design our procedures. The procedures include examining on a test basis evidence regarding the amounts and disclosures of the financial statements. So for instance, if we're going to test, the property, plant, and equipment additions that the county has in a year, we don't test every dollar, but we certainly test the large dollar amounts so that we can get comfortable with the amounts that are being presented. Same thing with cash. You know, we're going to test the large cash accounts, ones that have a lot of transactions, but the small petty cash accounts and things like that, we're probably going to leave alone. We also are required to obtain an understanding of internal control to be able to design our procedures. We also evaluate the appropriateness of the accounting policies. So the county reports on GAAP basis are generally accepted accounting principles, and basically it means that, you know, you record revenue whenever it's earned, expenses whenever a liability is incurred, not whenever the actual cash changes hands. So if you provide a service for somebody that costs $1,000, but you don't get paid until 6 months later, you've still earned that revenue. And so you are required to record it, and then you'd have an account receivable from somebody. Somebody owes you money. Same thing with expense. If you charge something on a card, but you don't pay it for a couple of months, you've still incurred that expense, and you also report a liability. And then we also conclude whether in our judgment conditions or events considered in the aggregate that raise substantial doubt. We don't believe that there are any. We're also required to communicate with those charged with governance regarding plan, scope, and timing of the audit, significant audit findings, and internal control matters that we identified. And so there are a few items that aren't identified and are in the reports at the back. There's a paragraph on required supplementary information, and it describes that we have performed limited procedures on that information and our responsibilities around that. There's also a paragraph on other supplementary information, and it also describes the procedures that we've performed and our responsibilities on that. And then we have two final paragraphs. One that's reporting required by government auditing standards. This makes reference to one of the reports in the back. And then the other reporting required by Oregon state regulations. This also is in reference to another one of the reports in the back. That's the one for the state compliance. Did we have, were there any questions about our auditor report?
I actually do have a couple questions, if that's all right.
Of course.
One is, you said you tested large accounts, but not small accounts like petty cash accounts. What's your threshold of large versus small? And I would imagine that there's like medium ones that are in between those. So what about those?
Right. So we have an audit program that basically it takes your assets, liabilities, revenue, expense for the departments individually and the county as a whole. And based on that, it says, okay, this is a reasonable calculation of like what would be considered a misstatement. We do kind of keep the dollar amounts secret, just because if an entity knows that, like, hey, this is the dollar threshold that we look at, then it provides an opportunity for, oh, well, they don't look at anything under, you know, $5,000, so we can do whatever we want with these types of transactions. But, you know, I would say just generally, it's probably around like, we would probably consider like an untested balance of around like 1% of an account. But there are like a lot of the times, so we have what's called a materiality threshold. And let's just say, for instance, that the materiality threshold is $500,000. So we've put the information into our audit program, and it says if you are if you have a misstatement of $500,000, then the financial statements are incorrect or they're materially misstated. Somebody would be misled. And a lot of times what we do is we test transactions that are like 10% or greater. So if we're looking through transactions or account balances, we're going to test everything that is 10% or greater than that threshold. Let's say, it doesn't mean that there's only $500,000 in cash. There's probably closer to, 5 million or 50 million probably. And the $500,000 is like 1% of that. And so we're taking a look at smaller bits and chunks to make sure that we're comfortable that there is not a misstatement out there, because we don't want there to be like an untested balance of, that $500,000 out there. Does that clarify or?
Yeah, yeah, that does. Thank you. I have another question as well.
Sure.
This one's kind of in the weeds and maybe on a more like curiosity nature.
Mhm.
You had said that, you had to record revenue even though you wouldn't get paid later. Like if we did a service and it was $1,000 and we weren't paid for 6 months, you still would record that as revenue. How does that work when you have like a third party payment? Like let's say we have a patient in our HHS clinic and the bill for that service was $500, but we have to bill like Medicare or something. We don't know what Medicare is going to pay out or at all. How is something like that recorded?
So that is a very good question. So a lot of times there are particular estimates, we call them, in the financial statements. And one of them is related to accounts receivable. So you may bill it for Medicaid or Medicare or whatever, $500, but in the end, you're only going to get, let's say, $50.
Yeah, that seems about right. Yes.
Yeah. And so what is required is that an estimate be made based on, and usually it's based on historical information. So if historically you only receive 10% of what you bill, then you would only record 10%, right?
Got it.
Or
Okay.
you might record what we call an allowance for doubtful accounts. And basically, you're going to record the $500 that you charged, but then you're going to have like a $450 allowance, which basically reduces that $500 down to $50 because you're only going to realize the $50. And so but it is an estimate. You may actually receive $100 or $75, or you may not get it at all. And there are particular estimates in the financial statements that, we have to look at and see if those estimates are appropriate.
Thank you. That answers my question.
Great. Were there any other questions?
None for me.
No.
Okay. Then I would like to go to page 97 in the annual financial report. And this is the independent auditor report, and it's required by Oregon state regulations. So this is one of the 4 reports. And this one is specific to the state of Oregon. Has kind of a lot of the same information as our prime opinion. We've audited the financial statements of the county for the year June 30th, 2023. We conducted our audit in accordance with generally accepted auditing standards. And then it goes into the particular Oregon revised statutes and Oregon administrative rules that we look at. And so here are a few of the compliance, not all of the compliance requirements that we looked at. Deposit of public funds with a financial institution. The state of Oregon requires that governmental entities have their deposits with particular financial institutions. We looked at those. Indebtedness, basically, the state of Oregon doesn't want governmental entities to overburden themselves with debt, so we take a look at that. There are also budgets legally required. There's a budget process that you go through, I'm sure you're well aware of, where you have your budget hearing, budget meeting, you receive the initial budget, and then you adopt it, and then you have resolution, etc. So there's the state of Oregon wants governmental entities to follow these standards. Insurance and fidelity bonds, programs funded from outside sources, looking at grants, highway revenues used for public highways. Basically, are those being spent in accordance with that particular ORS? Public contracting, is the county going through the proper processes whenever they're contracting out? So nothing came to our attention that the county wasn't in substantial compliance. I think that there were a couple of funds or departments that were overexpended, and that's described in the notes. But other than that, nothing to report. And then it talks about internal control. And it says in planning and performing an audit, this is very, similar to the information on that prime opinion. We considered the county's internal control over financial reporting as a basis for designing our audit procedures. And then it says our consideration of internal control was for limited purpose of the preceding paragraph, and we're not going to be looking for problems. But if we find them, then we're required to report them. And it gives a description of what a deficiency is. A deficiency in internal control exists when the design or operation of a control does not allow management or employees in the normal course of performing their assigned functions to prevent or detect and correct misstatements on a timely basis. Material weakness is a deficiency or a combination of deficiencies in internal control such that there is a reasonable possibility that a material misstatement of an entity's financial statements will not be prevented or detected. And we did note that there were 3 material weaknesses that we found. So prior to adjustment, we felt like the financial statements were materially misstated. There's also a description of a significant deficiency, and it's very similar. It's a combination of a deficiency. It's a deficiency or combination of deficiencies that is less severe than a material weakness, but important enough to merit attention. And we found one of those. So that was your report over Oregon state regulations. And if we go to page 99, the next couple of reports are with regard to your single audit or federal grant compliance audit. And a lot of this is basically the same. It's almost verbatim. We've audited in accordance with auditing standards generally accepted in the USA, the various activities of the county for the year ended June 30th, 2023. And we issued our report. Here's the same in planning and performing. We considered internal control over financial reporting. It also describes deficiency in internal control. It identifies that there's 3 material weaknesses, 1 significant deficiency. There's also a portion and report on compliance and other matters. We didn't find any non-compliance or other matters to report. The county did have a response to the findings, which, they're developing a corrective action plan with regard to the findings, but we didn't audit that. And so we're just required to note that we don't have an opinion on the response. And basically the purpose of the report is just to describe the scope of our testing on internal control and compliance. And then the 4th report is on compliance for each major program or federal program. And this is specifically related to the federal grants that we audited. And there are various compliance requirements that are specific to those federal grants that we look at. But we did not find any issues. We had no issues with the internal controls around the compliance requirements for those federal grants. We did not find any non-compliance. This is also a clean opinion, has a lot of the same jargon. So I think that's probably good enough there. I don't know if you have any questions over these reports before we hit the final section, which is going to be basically a really good summary of the county audit.
I don't have any questions at this point.
Nor
Okay.
do I.
So if you'll go to page 107. Oops. That's 107 for you and 126 for 132 for everybody else. All right. So here, this is the schedule of findings and question costs. This is a very good summary if you want to know just the basics around a report. It states right at the very top, type of report issued, the financial statements, unmodified, clean opinion. That's the highest opinion that we can give. You don't want to have a qualified opinion. You don't want to have a disclaimer of opinion or anything like that. That just sends its red flags. And so unmodified is the best. Internal control over financial reporting, material weaknesses identified, yes. Significant deficiencies identified, yes. Non-compliance identified, no. Internal controls over major federal programs, no. Significant deficiencies, no. Report on compliance with your major federal programs, unmodified, highest clean, good opinion. Other audit findings, no. And then it identifies the programs that we tested. It was the coronavirus state and local fiscal recovery funds and the health center program cluster. Did the auditee qualify as a low-risk auditee? No. So there are particular requirements to qualify as a low-risk auditee. One of them is filing your financial report with the federal government within 9 months after year end. The fiscal year 22 audit was not done in a timely manner. So automatically does not allow the county to qualify as a low-risk auditee. Another one is related to material weaknesses in internal control over financial reporting. If you have that, you cannot qualify as a low-risk auditee. So these things happened in the prior year, and it will carry forward for the next 2 years. The major effect that it has on the county is that if you are a low-risk auditee, whenever an auditor looks at your federal expenditures, we have to ensure that we've tested 20% of your federal expenditure. So if you have $1 million of federal expenditures, we have to ensure that 200,000 has been tested. If you are not a low-risk auditee, the auditor has to ensure that 40% is tested. So now you have to test 400,000 of that million. And so it can require testing of additional federal programs. And so that's how it affects the county specifically. So that's just a good summary right there. And after that, it gets into the internal control findings. So the next page, the first material weakness is related to audit administration and preparation. This one is related to a lot of the revenue recognition issues that we had. We were required to adjust beginning fund balance. There was some revenue that should have been recognized in the prior year. That would have been the fiscal year 22 audit. And these are related to receivables where the county earned money, was owed money, but wasn't paid until after year end. And so we had to adjust for that. We also identified particular receivables that needed to be recorded in the current year or the fiscal year 23. And because there were so many and the dollar amounts were so great, it was identified as a material weakness. Same thing for accounting for the capital assets. The initial schedule that we received required numerous adjustments. There was also a restatement on various assets that were no longer owned by or maybe they were projects that were previously disposed of and no longer in the county's possession or whatnot. And so there are so many adjustments related to the property, plant, and equipment that it rose to the level of a material weakness as well. The final one is related to the schedule of expenditures of federal awards. When we received it, there was a number of expenditures that were on that schedule that should not have been. And it actually affected our initial selection of program. The county was really a contractor instead of a subrecipient of a grant award. And it's a slight technical distinction there, but there was about $3.5 million of expenditures that were on there that should not have been and should not be identified as a federal grant and needing to be tested for its compliance, because basically the county provides a service and they get paid for it. And there's not a compliance requirement that they need to meet. And then the final internal control deficiency that was either a material weakness or significant deficiency is related to bank reconciliations. There were just a lot of reconciling items that were stuck in the county system that needed to be corrected. And also the cash of the county just needs to be reconciled to the system in general. And so those are the items that we're required to report to you. We're also required to include in our report, and that's why they're there. There's also summary schedule of prior audit findings, which is on page 111. Two of those are repeat findings. So it's the deferred revenue is related to revenue recognition and then accounting for capital assets. These items have been discussed with the finance team at length, and I think that they have a plan in place to correct that going forward. That being said, I've done this for a long time, and there were numerous entries, and by the time that we finished this audit, fiscal year 24 was already completed. And so it would not surprise me if there are still some errors in the fiscal year 24 audit and some adjustments that need to be made. I could be wrong, but just in my experience, there will be. I will say that the finance department had a really good close with respect to the fiscal year 2023 audit. We ensured that basically we're starting at the same point for the fiscal year 24 audit. And so I have some hope that all of the accruals and adjustments that need to be made at year end will be taken care of, and we can report a clean audit. I'm hopeful, but I'm I'm also pretty objective, and I've seen a lot. That's basically the conclusion of this report. I definitely want to thank the team there that you have. They put in tremendous time to get this audit done. That department is down a key member as well. And so not only are they doing their own work, they're doing work for a position that you're missing, and they're providing numerous documents that we request, because the county is a large organization. There's a lot to test, but you know, they've been very helpful with this process. So if there are any other questions, please feel free to pose them, and I'll try and answer them as best I can.
Yeah, I have a question on the schedule of expenditures of federal awards reporting, that material weakness in particular. You said the issue was that we had things that weren't actually a federal grant, but more like us being a contractor.
Exactly.
What's the difference in that? Because I mean, oftentimes there's grants we go after where you are proposing to do a service for that agency. It's competitive. So like, really, what's the difference here, I guess?
So the telltale sign for us is usually it's stated on the grant agreement. And there'll be, you know, I've seen a lot of agreements with federal or state organizations, and they'll have a checkbox, and it'll say subrecipient, contractor, other, or whatever. And if that subrecipient checkbox isn't checked, then it's kind of a telltale sign. But it really goes into the accountability of an entity. And if you're just a contractor, you perform the service, and once you perform that service, you're all done with. Whereas with a grant, the state or the federal government can come in and basically audit or perform an observation of the compliance of those grant awards, similar to what we did, except that they're more in depth. They find much smaller items than we do. We're provided a general list. It's put out by the OMB, Office of Management and Budget, by the federal government, and there are prescribed steps that we perform. But I will say, yeah, the overarching theme is that it'll say you're a subrecipient or a contractor. And a lot of these sometimes are silent. And when that happens, you have to go back to the granting agents. And we did that several times where we asked them, and sometimes we asked them 2 or 3 times because they wouldn't like to be very forthcoming. As we said, we note that it's silent as to if it's a subrecipient or a contracting agent. Is it correct that they are not a subrecipient? You know, and the response that we would get would be kind of vague, and so we'd have to be very direct. Like this should not be. They're not a subrecipient of your grant. This is a contract, and they'd be like, yes, this is a contract. And so we kind of had to paint them into a corner. But we did that with many of these because they were large dollar amounts, and we want to get it right. And so we would ask them, okay, we've looked at this agreement. We can't find anything. Can you please reach out to who is in charge of this grant? And so we did that. And that's how we determined that they were not grants, they were contracts.
Thank you. That's helpful. It kind of tells me too that some of those agencies aren't being maybe real forthcoming with us in the beginning either, as we accept the funds. If you had to work so hard to get the answer, that answer wasn't necessarily clear to us either. So thanks for that.
For sure.
Yeah, Don, and to Commissioner Jacobs' points, it's not really that there's fundamentally a right or wrong way to be a contractor or subrecipient, just maybe that the work you might incur. Do you have any recommendations on being proactive, I guess, to what clients might have to go through?
If you're receiving some sort of agreement with a governmental agency, I would just, you know, if it doesn't state it outright, I would inquire, like, hey, are we a subrecipient? Is this a grant agreement or is it a contract? And I would keep that response on file. And that's what we tell them, like, you know, please keep that. And we kept those responses, and we put that in our audit file, where it's like, hey, this was reported in the previous audit as federal awards. Are they federal awards? Like, no. And they would say, no, they're not. So they're not a subrecipient and should not be on their schedule of expenditure of federal awards. And they would say something like, they are not a subrecipient. They wouldn't answer like, this should not show up. It's like, they're not a subrecipient. They're, you know, so, and maybe they're just, you know, CYA with their responses. But that's what I would do. If you're getting an agreement, just inquire right off the bat and keep that with the agreement.
Thank you. Other
No more questions.
questions? No? No? Okay. Thank you, Don. Anything else, or turn it back over to Administrator Johnson at this point?
Mr. Lip, can you put up a PowerPoint presentation? Thank you. We're going to turn our attention here to supplemental to the staff report. Um, Thank you.
This is version, version B here, I think.
Yes, sir.
Okay.
Thank you very
Gotcha.
much for asking. I will be joined here again by the county treasurer and county interim finance director. But we'd like to walk you through some things because we think it's very important that a lot of what you've heard here today has been and continues to be addressed, and it's important for you to understand all. First and foremost, as was identified by the auditor, there was a major delay in the 21-22 audit. I kept all of you up to date almost on a weekly basis, as you know. There was a period of time in which I actually traveled to that auditor's office and sat in their lobby for several hours waiting to get a status report on what was going on. And as I reported back to all of you, it was unacceptable. And I sat there for 3.5 hours waiting to get any information, received none. Came back, worked with the county council. We initiated a termination letter of that firm. When we did that, that then subsequently brought them back to the table to pursue this. But again, much to KDP's subsequent audit, um, they too were stuck because we needed to finish that before we could actually move on. And this elongated the actions necessary to do that. Now, let me stop there for a moment. This was a very frustrating period. In 40 some odd years of my work in the public sector, I have never witnessed what Lincoln County went through. And I tried to tell all of you what we were confronted by. I reached out to the Secretary of State's Department of Audits. They really have no control the way that the audit system has worked in the state of Oregon, unlike Washington and California, where the states actually perform the activity. There is no delay. It is the states that come into the governmental agencies and perform that on a regular environment. Here, it's done by the private sector, and it is at will when they can do something. And in the context of even reaching out further to the accountancy board, also with the state of Oregon, time is not an issue. They can't do anything. You're stuck at where you're stuck, and until there is some resolution, you're stuck. So I want to make sure that you all understand that. Now, knowing that we weren't having any success, I asked for a direction to go out and hire a new audit firm. We did. That review committee comprised of county council, county treasurer, and sheriff. And we sat in this very room and interviewed audit firms, and that's how we came up with KDP. They began the process. They understood the frustration we had, or we're still having, with the 21-22 audit. Within the context of that, as KDP began their work, they presented a variety of issues that you've now seen in our audit, and that kind of embarrassed the previous auditing firm to bring forth the material weaknesses that you saw presented in the 21-22 audit. Now, had we been informed of those as in a professional manner well in advance of the 21-22 audit, go back 2021 audit, you wouldn't be confronted with these material weaknesses, which is an unfortunate professional disclaimer that I believe really does not speak well for the process that is used in the state of Oregon. And mind you, I've worked in Oregon, Washington, and California, and I can see the major differences here in Oregon that have had to come play with what we're dealing with at this point. So to that end, we thank KDP for helping elevate those and achieve what we needed to achieve to have what would be a clean canvas to work from. It forced us to address issues that had not been previously brought to you, the commission. So that bothers me professionally. You are the fiduciary responsibility of this county to oversee these things. I'll get to that here in a few minutes of how good our work is, and I want you to understand that, but that's unfortunate. Before I embark on this any further, I want to thank all the department heads and elected officials that oversee departments. I want to thank you for having the patience that you provided for us to go through these. Yes, we have done, and much credit to the two people that are sitting next to me here for the work that they've done. We've gone through 2 audits in less than a year.
Administrator Johnson, I just got a note from Ken that we might be having some technical issues with people watching. So if we can just
Need
pause
to check.
for a minute, he's going to check something.
Thank you.
Yeah.
Yep, if you can hear us, we're just taking a brief technical.
I don't know that that will fix it, but that's all I can
Okay.
You feel like maybe the audio's, is it still coming
think of.
through?
I got an email that the video is glitchy, that it keeps on freezing.
Okay, but we're recording it in Zoom, so, okay, we'll have a clean copy. If you're listening to us and it's coming in and out, don't worry, we've got the recording going, so thank you.
Thank you, Mr.
Yeah.
Chairman. Again, I want to thank all those at the county. It was an exhaustive effort because they not only had to do 1, but 2 audits. It's a tremendous amount of work, tremendous amount of burden. I thank them very, very much for that. I also want to share with you the integrity of county staff as it pertains to looking at the health, fiscal health and well-being of this county is unequaled. I will tell you, they really know their material inside and out. And I think what has transpired, and again, incredible compliments to the county leadership, your leadership, and staff at all different levels, please. What happened, and let's just give you an idea about this. In 2020, in our budget, we started at $154 million budget. Within 1 year, we grew that by $30 million. That was not fundamentally was not constituted by an increase in standardized tax revenue. That was the hard work of the men and women of this county going out and getting grant money. And they did it with great fervor, and I just cannot thank them enough for that action. And it continued again into the fiscal year that we're currently into. Now, what transpires, and we all know this, there is a turnover in many positions. And when you do that, sometimes things don't necessarily always transition. Not all information gets to where we need to go. So when you heard KDP describe that maybe there had been some issues relative to our compliance on grants, I think that what we're learning is so very important for the future health and well-being of fiscal health of our county. We'll get there, but what our folks have done to raise that kind of funding is just beyond comprehension. I've never seen anything quite like it, and I want you to
Can you,
all
can
understand
you
that.
say the numbers and the year again? I was trying to.
Okay,
find them.
sure.
Yeah.
So in 2022, for the budget, you had $154 million.
Mhm.
We moved into the next fiscal year and you had $184 million. And I would tell you that probably 90% of that is predicated upon grants, our acquisition of new grant dollars in here. Kudos to the staff to do that. And that continues on in our budgets today. So they have been, I don't even have a verb that I want to use to describe it other than it's just a phenomenal effort, and I'm very complimentary of everybody on that. I think we're doing things that will improve the health and well-being of our fiscal health of our county. There has been an impromptu meeting of grant writers across the county, countywide. I think that we are sharing more information with one another, looking at all of these issues. And it now helps throughout the whole organization, from department directors to the individual staffs that are working on it. They're very much more in tune to what to look for as it pertains to this audit. I'm going to turn this over to Deanna Gravel to go through what we have for you in the staff report and talk about the plan of actions and what we're doing, what we have done, and what we plan to do.
Good morning, Deanna Gravel, Interim Finance Director. And we're going to talk about the 4 findings, the 2 that are from fiscal year 21-22, and the new ones for fiscal year 22-23. And then I'm going to discuss the revenue with Jane Welch so that we can explain this together. So what happened there? So I'll tell you what happened, some history, and then I'll tell you where we're going forward and what our plan is. So revenue was recorded in the county. There was no revenue lost anywhere. However, it was not recorded in the correct year. And they discussed a little bit about the accounts receivable. This also occurred for deferred revenue. And what that means is money that we earned but had not spent yet was not properly carried over. The biggest being the ARPA funding that we have still not spent completely yet. So that will be continuing through the next fiscal year also. The capital assets issue had to do with some bridges that weren't properly recorded as construction in progress, which means what happened is it was an ongoing multi-year project for 2 of the bridges, and they were not properly recorded and carried over into the next year for the auditors. The schedule of expenditures of federal awards, I think, has been discussed in length. What has happened there is the bottom line is that we over-reported our CFA and should not have, based on what Don and then Commissioner Jacobson were discussing. We did not remove the monies that we weren't directly recipients of or spent correctly as far as how that was recorded. The accounts receivable is part of the material weakness and deferred revenue. If you want to discuss that just a little bit, how we're planning on addressing our actions.
Sure. Jane Welch, Treasurer Tax Collector. So there was a period of time that didn't reflect proper recording of accounts receivable and deferred revenue. It was based on finance decisions. And so upon this audit with KDP, and their findings, we've since reverted back to the accounts receivable and deferred revenue process that we had previously. So our plan of action is to continue with that.
And for that, it really comes down to timing. It's a matter of keeping the year open a little bit longer to give us a chance to record it in the correct year. You want to discuss
Okay.
that?
Sure, we can talk about the bank reconciliation cleanup.
Mhm.
As far as the bank reconciliations, I think you have a document that I'll go into a little bit more with that. All bank accounts have been reconciled. What the cleanup is there were in code financial software entries done that did not reflect upon the bank account for whatever reason. Some stemmed back to 2013, 2018. So, and those items were never cleaned up. And so my staff and I have since been cleaning up those entries with the help of the auditors and the financial software engineers of Encode. There are a few still outstanding that we will be working on to get those cleaned up. So, but as far as bank accounts, they are all reconciled timely and efficiently and to the penny. So we're confident in that.
So just to make sure I understand this correctly, Encode, which is the county's financial bookkeeping system, this would be like if our bank account said we had $100 in it, but your Encode said you had 1,000. Is that kind of what we're talking about?
That's
Yeah,
exactly
okay.
it. Do you want me to continue with this?
ahead.
Okay, so on the lines of banking and bank reconciliations, I just wanted to give a brief overview of our banking. As you all know, we had some transition in 2021. Our local branch, Columbia Bank, the Newport branch, was sold to First Security of Washington, and other Columbia branches merged with Umpqua Bank. I had some discussion with the commissioners and county administrators. I didn't feel at that time of the transition that the standards were acceptable. So we adopted collectively to move the local bank accounts to Umpqua Bank in 2022. In 2022, additional to that, the Bank of the West merged with the Bank of Montreal. It was minimal impact to us. And just so that you're all currently aware of our current banking for 2024 and going forward, we have Umpqua Bank as local, Bank of Montreal, which is local, First Interstate, which is local. And it's important to have local due to maybe contingencies that may come about. So it's good to have local money that we have free access to, on a daily basis. If we had a catastrophe, we could walk to the local branch and they could help us. So I think that that's very, very important. And then lastly, we have the LGIP, which is the local government investment pool, where the majority of our dollars live to gain the best interest.
I remember also on banking, one of the issues was that we needed armored transport, and so that
Yes.
was a barrier to some of the potential,
Yes,
banks.
yep, yes, indeed.
Jane, can you speak to why that's so essential too, to have something local? I mean, you really advocated for that.
Well, I did, because the investment pool typically has sometimes 1 day, sometimes 2 day turnaround,
Mm.
depending on holidays, the turnaround is. So if we had a catastrophe and we needed funds to pay our vendors, to pay our employees, to pay whomever we have to pay, we have the local resources that we can do that right now, and we don't have to wait. So I think that that's monumental in conducting business of our county.
I remember Jane telling me that she had
Yeah.
a plan where if we had a major disaster, she could, I think, walk from somewhere
I
from here
can.
with a backpack to the bank and make
Yes.
sure
Yeah.
people were paid. Yeah, it's
Mhm.
important.
Yes,
Yeah.
yes, indeed.
Thank you.
Mhm.
Thank you for that.
I think to summarize, both of our offices have plans to address all of the findings. I think that we redefined some of our policies that we had issues with. And going forward, it's all about communication and education with the department so they understand what we need when the auditors come to us and why.
If we could go ahead and go to the next slide, please. So there are several policy actions. You heard KDP describe some of those that we need to undertake. We need to either update or add policy actions on capital development, debt management, retirement plan design options, economic development incentive, and let me stop there for a moment. We've had long discussions here with you at the commission regarding tax increment, state investment programs, SIP, and things of that nature. And we think that you really deserve a comprehensive economic development incentive package program so that you understand in decades to come that it's well delineated. Establishing an effective grant management process. We've tried to work on that. We're continuing to work on that. We promise you we will do that. I think you're seeing that. You'll see it later today with the ARPA presentation. And then establishing an effective investment policy. Next slide, please. One of the key elements is the formulation of an internal audit committee. I will be back before you in the first quarter of 2025 with recommendations for your review on that.
Administrator Johnson, general makeup of an audit committee, just foreshadow that.
Well, I'm not going to try to identify anything at this point, but I will tell you that normally that's comprised of an elected official, a city manager, or county administrator, county council, and either a treasurer, city treasurer, or county treasurer, or and then possibly anyone else that the elected officials are interested in pursuing. Again, we talked about fiscal strength. I want to get to that in a minute. Both our county treasurer and finance director talked about the forced banking issues. You recall that Jane was here before you to talk you through that, what was going on. Please understand something. At that point, we did not know this, but if you recall, the Silicon Valley Bank was on the verge of complete collapse while we were trying to be getting information about why we were being forced the way we were by the feds as it pertained to our money and where we could bank. The reason why now we understand why we didn't get the response, I think, timely as well as professionally from the Federal Reserve, was all hands on deck were dealing with that potential collapse of that financial institution in California. And they were hoping, and rightly so, work that it didn't, but it didn't help us at that point. I'll have Jane talk about this in a moment, but our bond rating remains high and we've got a future activity on this. Next slide, please. I think this one tells the tale very well. Now, I recognize this is yesterday's news, but I think this is important for you to understand the conservative nature of our fiscal health. First of all, in the budget of 22-23, if you go into my office and you look at the whiteboard there, I have numbers associated still from 2 years ago on the budget, and it said $50 million in general fund. And here comes our trial balance for 22-23, and we have $50 million. So that tells you how close we watch this financial statements of the county. Within that, of the general fund, 37 million was for expenses. 13 million was left in a fund balance. 8.3 million is in your reserve, as the commission has always directed that there is that reserve in operations. That gets you a little over 2 months. If everything fell apart tomorrow, you'd have 2 months of operational capital here. That left us with $4.7 million fund surplus. Now, I'm hoping that we will be able to tell you where we're at in the mid-year report in January, so that you have a fairly good handle, because we do have expenditures, cost of living adjustments, labor negotiations that are coming forward. To that end, next slide, the county's total net position increased by 13.2 million, or 14.6%. Kudos to one and all. That is a real accomplishment. You can see the revenues and in expenditures, and then the subsequent sum of the general fund within the 22-23 budget. I'm going to turn this back to Jane for a minute, but if she wants to, but I know that she's talked about it. This provides you some timeline of what transpired for us and how things work. Did you want to add any more to that?
Well, I think that I covered it in what I had mentioned before, but we felt it was important to include it in this PowerPoint. But I think you have the background and the years and the timing and when everything transpired within the banks. So I think we have exceptional local banking services. We have a great working relationship with them. We have the LGIP, great working relationship with them through Treasury. I think we're in a really good place with our banking institutions at this point.
Next slide, please. This is very important. The bond action that we have in the county. Currently, we're in a situation because of a couple low cap loans that were initiated in the last decade in 2013, but we have so little money left to pay off. Jane can describe this, but we are going to take an action and come back to you to get your direction on it, to pay that off because it's so little, and move our rating back up to the high of an AA3, which I should have listed where that is. That is the top that a size county of our nature can have. Again, kudos to the team and the fiscal health and well-being of this county as it pertains to that. Did you want to add anything to that?
Sure. There's about 1.5 to be paid off, which will have a significant impact on the amount of interest that we will not have to pay. So I feel it would be beneficial for us to do so. I started looking into that and did talk to our representative from our investment, where we make our investments, and he said it could go either way. But then when I had him kind of dig into the weeds per Administrator Johnson's request about our rating, that came up. So I think it's a good indicator for us to move forward and get that 2013 low cap loan paid. And as you can see, the low cap for acronym is the Local Oregon Capital Asset Program. But once we get paid off, that will increase our rate, which I think is the goal.
What's important about that is, and we have two of those right now. We have this one that you're looking at 2013. You have the other one that was used for the animal shelter. The one for the animal shelter, however, has got a 1.65% interest roughly, and its term is to 2035. Look, we're already at 11 going on 12 years now. There's no reason to continue this one to term. We can pay this off. Why do I say this? If we go based upon your direction to bond against the TRT tax for the development of the commons, we will take on an increasing amount of debt, but that debt does not necessitate that it goes on the shoulders of our fiscal general fund requirement. It is the TRT tax. We have municipal advisor services that will be assisting you with that information. And to get this kind of rating, I think, is advantageous for us for decades to come.
Administrator Johnson, well, you were not here for this, neither was I, but what was that 2013 low cap loan for?
That was for capital projects.
Okay.
I wasn't involved in it, so I don't know exactly what it
Okay.
was used for, but I know it was for capital projects.
We have Wayne Bell.
And-
Oh, does Brian know? Oh, no, I thought you raised your
and-
hand. Sorry, Brian.
And I know that the latter.
Claire, there we go. Yeah.
Yeah, I was here then. I recall, not the specifics, but it was a list of, I'm going to say 6 to 8 just capital projects that had been deferred, and we kind of got together and agreed that there was sufficient urgency to put together this bundled detail to finance going forward with them.
Okay,
Right.
thank you, Claire.
You
Thank
bet.
Yeah.
So these don't necessarily require going out to the market. They don't go to Wall Street, and you cut these individually with a certified assigned bank by the state treasurer that allows us to do that, such as we did with the, lack of better expression, the animal shelter. So with that, we won't take up any more time. We know that maybe your eyes have glossed over, but if you still have any questions, we will begin to undertake the next audit with KDP. If Don isn't tired of us by now, and we'll
I
have.
think it might be the other way around.
And have that activity undertaken and done before we get to the budget process, at least the public hearing process going forward into 2025.
Commissioners, any comments, thoughts?
No comments other than this was under decision action, so do we need a motion to accept?
Yes, you do
the
need to
audit?
take a
Okay.
motion to do this.
Chair, are you
So-
ready for that motion?
Not quite yet. I
Okay.
just wanted to just say thank you, everyone. We've had so much opportunity. And to Commissioner, to Administrator Johnson's point, do you think we're cleaning, is that canvas getting, new? And will there be less work as we move forward? And your sanity?
I think so.
Good, good. Thanks for everything. It's been a lot. Okay. Let's do it. then.
Ready? Okay.
Yep.
I'll make a motion that we adopt the 2022-2023 audit and plan of action as presented.
I second that motion.
Okay. All in favor, please say aye.
Aye.
Aye. Thank you. Dawn, appreciate you coming on.
Thank you for having me. And I hope everybody has a happy Thanksgiving here coming up.
Thank
Yeah,
you, Don.
Thank you.
Sure.
Yeah.
The works supervisor texted me and said that this item B shouldn't be there. It should just be in consent.
No.
So the next item.
Okay.
Wasn't in consent, so we need to approve it anyway. So why don't we just make a motion or something? Is that good enough? Okay.
Yeah.
Was it in consent already, Ken?
It was not. It got filed in the wrong place originally.
Yes.
Okay.
So I would move that we approve this contract with Greenlight Electrical for services at Jack Morgan County Park.
I'll second the motion.
Okay. All in favor, please say aye.
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 We've got quite a bit here. Do we want to take a break yet? I know I need to use the bathroom at
Mm.
some point.
Yeah.
I'm with you as well, Chair, but I think I can maybe do another one.
Okay.
So let's go through one more.
Okay.
Okay. Should we jump to elevator ARPA award?
Think you're up, Mike, sitting back there.
See? Please join us, Mr. Cobb.
Is this on?
The red light on?
So are you read?
Yeah.
Okay.
All right, excellent. Thank you for having me. With a Herculean push from Brian Gardner, my boss, and various other people, I can't appreciate enough. We came before the Board of Commissioners on October 2nd stating difficulties and problems that we're having with modernizing the elevators in the courthouse and in the jail. So much so that I'm really worried about the safety of public and staff. With the help of county council, we went out and we performed an RFP,
Mhm.
and we got a couple bids back, one from TK Elevator, one from Otis Elevator. The great thing is that in Brian's infinite wisdom, and I'm throwing you under the bus on this one, he separated the two buildings to two separate RFPs. This actually, I think, gives us a great opportunity. For one thing, our current elevator company that does all of our preventative maintenance, they're on call, TK Elevator, they're accustomed to all of the elevators in Lincoln County. Now, when we got the bids in and we had a discussion, I have copies of these if you want them right now. Or later. They have them, excellent. They should be, yes. It came down to, we recommend that TK Elevator, even though they're $600 roughly over Otis to do the jail elevators because they are familiar with the complexity controls of how the jail needs to operate through central control. They've been maintenance and working on them for years. I figured $600 gives us a little added security in that. And then Otis Elevator, I would like to award them the courthouse elevators. They were well under their competitor. I've had great reviews from them. And the total is over what was allotted of 694,000 roughly and some change. I'm asking for 788,000. I think that worst case scenario, I would like to pull it out of some sort of building repair fund if I had to, but I think as far as safety and security of the county, it's extremely important to get. done.
What was that difference again?
It is roughly, I want to say, we were at 694,000 was allotted, 694, 621, and I'm asking for 788, 577. So about $90,000.
Short.
Correct.
Okay.
But since they're going to be working on those elevators all of next year, that overage can be broken up into this fiscal year and the next fiscal year, I believe. And it can be pulled out of building repair funds or something to that effect, or in any other options as far as that goes.
And Mr. Kopp, we've got the memorandum here. Did you?
And thank you, Michael Dewan. He helped me write this up.
Thank you for this. Okay.
Mhm.
Yeah. Commissioners?
I don't have any questions. I reviewed the memo. Everything seems in order. I'm ready to approve this.
Yeah, me
Did
as
I
well.
miss anything?
Mr.
No, I
Gardner?
just want to be clear, that's for each, that's a total for both RFPs.
Correct.
The
So that-
788.
And so that would be
Yeah.
broken up to two different
Yeah.
potential awardees.
Yeah.
That's just one to each, correct?
Yes.
Mhm.
And that'd be.
So, Mr. Gardner, since we are awarding to two different companies, do we need two different motions?
Yes,
Okay.
well, not, under the memo, you can probably just approve this because what I would be asking after that, if this is approved, is for guidance from the board directing staff to issue notice of awards to each of these and to start to work on entering contract negotiations, because the other part of this is, I believe, all but the 90 or so is going to be ARPA funds.
Mhm.
So we want to start working on the contract as soon as we can. So I'd ask for that direction if that's what you
I
guys
would,
want.
so my recommendation is to make two separate motions. So make a motion awarding the RFP to
TK.
TK and then the other to Otis.
Oh, it's-
And just to be clear, TK elevators is for the courthouse. And,
No.
Oh, it's the other way around.
Yeah,
Sorry.
jail.
So Otis is courthouse.
Or Otis is courthouse.
Yeah.
TK 's
Okay.
Gotcha.
So two motions and then kind of a consensus to direct staff.
Yes, to issue the notices of award if those are, if the board agrees with that, if that's how you vote.
Okay.
And then to work on entering contracts with each.
Okay. I think I'm.
Got it?
I think I got it here.
All right.
Okay. All right, I'll take a stab. All right. I'll make a motion that we award the request for proposal to TK for the jail elevators.
I second the motion.
Okay, all in favor, please say aye.
Aye.
Okay,
I'll keep going if we're okay with that. I think I got it. Okay. I make a motion that we award the RFP to Otis for the courthouse elevators.
I second the motion.
okay, all in favor, please say aye.
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 And then also, do we have a consensus to direct staff to issue these award notices and work on entering contracts with both of these companies?
Yes.
Yeah.
Yes.
Okay,
Okay.
agreed.
Anything
Thank
else?
you, Mr.
Thanks,
Gardner,
Mike.
Mr.
Thanks,
Cobb.
Brian.
Let's jump
Great.
into one more and that'll put us out of decision action. Is that okay? Or do you want?
Could we
break?
have a
Wanna
break
do
at
it
this
now?
point? Yeah, I'd
Okay.
really appreciate it.
If you're watching us, we're going to take a
We are unmuted.
All right. Thank you. We are back in session. It is 11:47, and Administrator Johnson, you bring us to that last decision action item.
Thank you. On your staff report, I would like to make a correction on something. I don't know how this got out. On page 1, that should say, under recommendation, approve the reallocation plan of ARPA SLFRF dollars of previously awarded projects totaling, and that should be 245,613.
There was also one other thing on the staff report that was typo or mislabeled, and that is under discussion, cleanup items. It says second bullet. There you go. It says rename election observation cameras to election observation cameras. And what it needs to say is rename election observation cameras to election observation cameras in microfilm machine. So
Say that one more time. I didn't.
Sure, yeah, sorry about that.
Rename the election observation cameras to,
election observation cameras and microfilm machine.
yeah, I think we're missing something on there because I think there was 2 separate nomenclatures for election observation cameras.
Okay.
So we'll need to check on that for you, but and then you're right on the remaining balance to purchase the new microfilm machine. Let us check on that but that action, there is an action. The name of the
Why
election.
don't I go get my notes? You guys keep talking. Let me go
Yeah.
grab my notes off my desk. Sorry.
No problem.
Yeah, and we're gonna need to change that on the motion. Okay, so we have some cleanup work to do as it pertains to ARPA, State Local Recovery Fund. Primarily approve the renaming of the roof replacement project that HHS is doing, I believe, in Lincoln City to roof replacement and sprinkler system. Again, rename the election observation cameras. And we'll find out on that momentarily. Change the name of nonprofit allocations to water and sewer districts. So that's appropriately identified for reconciliation, specifically as it relates to the narrative. Ensure ARPA allocation for mailroom worker. Now recall, you had you did not eliminate that position. You had a reduction in the sum. And what we learned this week in a meeting with Treasury folks was that we don't believe that there was ever a board order number that was initiated for that action. And we want to make sure that today's action covers that so that we are not left with hanging. They specifically informed us of that because at the end, if there was an audit, we would be forced to have to disencumber or pay for that if it wasn't didn't meet their audit. And we are understanding there will be audits and they will come probably in 2027 because we have the ability to continue to carry out this work through 2026.
Administrator Johnson, didn't you say that Treasury had staff reductions, and is that going to continue to affect that audit process?
Yes, it will.
Okay.
You absolutely will, and that's the reason why we've got to be insured on that. Then also under discussion, there was to ensure an ARPA SLFRF allocation for executive assistant. Now that occurred in 2021, 2022. But we need to get a board order to cover that as well. And it's just a function of making sure that, one, we show the journal entries of the transfer of dollars from ARPA under your authority to the general fund to make these payments occur. And then there is a corresponding board order so that those are shown proof of your actions as the legislative body overseeing this county. Nobody else can do that but you. And we want to make sure that those are covered so that we don't wait to the last minute or somebody goes, uh-oh, on January the 2nd or 3rd, whenever we're back here, we didn't get that taken care of. So there has been a team of people that Commissioner Jacobson has been working with, from the finance director, budget personnel, our grant folks, and our CPA, all working together to make sure that we get all of this taken care of. So it's quite an effort. I will turn to the commissioner. Did you find that language?
I found my notes and, yes, the second bullet should say rename election observation cameras to election observation cameras and microfilm machines. We just need to add an and microfilm machine.
Okay. To that end, then we move to the actual projects themselves. That's on page 2. We're reducing the courthouse allocation from 400,000 to 250. 250,000 for the space facilities need, resulting in 150,000 to be reallocated for 40,000 to replace a jail dishwasher unit, $10,000 for a consultant that helps continues to help us with the IT tabletop work that was done. $100,000 would go back to the ARPA audit. Recall that we originally had it at 360. We removed 100,000 for other programs, however, found that the need is as was originally identified. We have sewer and water district projects is completed. We have a residual of 66,900, which can be reallocated. Conversion of digital records in the clerk's office project is completed. 3,223 can be reallocated. Continued support of virtual meetings here. Project is completed. 846 remains and can be reallocated. Election room processing project is coming to an end. Reallocate 6,587. Remaining balance will be used to complete project. Commission chambers project is nearing completion. Reallocate $3,057. Child care provider grants project, I guess, is wrapped up, and then we can reallocate 15,000. So the total amount for reallocation is $245,613. The move to approve those reallocations is listed. Again, allocate 100,000 back into the grant admin and auditing process. Allocate 17,369 to DA's office for high-walled cubicles. Now, recall that that was initially in the first salvo. They performed some, and then they said they didn't need any. But now they find out, hey, we really do, so that works out well. Allocate 40,000 to the sheriff's office for the new dishwasher. Allocate 10,000, as we described, for cybersecurity. Allocate 23,244 to HHS for roof replacement and sprinkler system. Allocate 15,000 to the Lincoln County Solid Waste District for code enforcement cleanup. Much appreciated there. And number 7 can be crossed off because it does balance to 245,613. So what we would like you to do is, I believe we have been given two motions to cover. The first motion would be then the one to prove the cleanup so that we have a specific board order number on that. And then importantly, a second motion to approve on the reallocations so that we have that. And we know that there is more to come, but boy, this really gets us a long ways to total reconciliation on this. Any questions?
No questions.
No,
Nope.
thank you, Administrator Johnson.
I'll make the motion for the cleanup. I'm going to read them just so we capture that one name change in here from the report.
Okay.
I'll make a motion to approve the following ARPA cleanup. Approve the renaming of roof replacement project in HHS to roof replacement and sprinkler system in HHS. Rename the election observation cameras to election observation cameras and microfilm machine for the clerk's office. Change name of nonprofit allocations to water and sewer districts. 4, ensure ARPA allocation for mailroom worker to full-time needs, have a board order and approved transfer of these funds. 5, ensure ARPA allocation for executive assistant.
I'll second that motion.
Okay, all in favor, please say aye.
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 Okay, thank you.
I will make a second motion to approve the reallocations as presented by staff.
I'll second the motion.
All in favor, please say aye.
Aye.
Thank you.
Thank you.
Okay, moving ahead. Out of decision action, we're going to get into discussion now. Our first item is a report number 5, the project timeline for animal shelter construction. Administrator Johnson, I believe that was in consent, but you can move this into the discussion arena.
If you
Commissioner
recall, we had
Johnson.
this, yeah, on
Yeah,
the
thank-
consent, you wanted
Good
to
idea.
take a look at this. So earlier, you voted for, under consent for the gross maximum price. So a couple things. We are on our way now, moving forward. As photos can be shown from last Wednesday, it seems like Wednesdays are always beautiful and sunshiny around here. I don't know what's going on, but you can see the footings being set, and hopefully they have lost some time because of the weather. Those numbers are probably dragging out to about 3 weeks. They will make some of that back as we get into the springtime and summer, so I'm not too worried about it. The next major step as they pour the footings, they'll be having all of the plumbing work put in, and then they will secure it and pour the foundation. So next week, I'm looking at the weather forecast, and it looks really good. So they're planning to hit it hard next week. And if you get out there, if you get a chance to get out there, you'll see it really taking shape. It's I keep telling everybody, it's a much bigger building than you think. 5,000 square feet is big, and
And I think that the pictures show this. I
What's
mean,
that?
the pictures show,
Show
and
that,
it seems
yeah.
so much larger now.
Yeah, it is, it comes to fruition, doesn't it? To that end, we'll continue to follow this for you and the timelines necessary, but what happens now is that we have the GMP signed and we have their work going forward. Recall, we set ourselves up in a multidisciplinary team where we were meeting weekly. Those now will disappear. County council and myself will continue to work with the team, but for the most part, it's on us, a movement going forward. So I think where the next thing that I would ask the commission to help on is the ribbon cutting ceremony. in September or something to that nature. And let's plan for that. Good weather in September, always, normally. And you can do whatever you feel so inclined to do. But here you go.
Wonderful.
And one other thing I'd like to add is, you know how much it rained last week. Please look at, you see very little water
Mhm.
in and around that site. They've done an excellent job on ensuring the fact that the water runs off the site. So that's a really good thing. And to that point, you recall how much ground or soil was excavated and then the compacting that was done in previous reports.
Excellent. Thank you. Any questions on
No,
his
yeah,
updates?
great.
Nope.
Oh, okay. We move to item B in discussion. This is the first reading of ordinance number 538 related to land use planning, amending Lincoln County Code, Chapter 1 regarding administration and declaring an emergency. And it looks like Director Husing is with us. No
So,
Holbrook today or?
no, Commissioners, Kristen Yule, County Council, would you like, by title only or full text reading?
Title only,
Title only.
please.
Title only is fine.
Oh, you think I made a joke?
This is always when we
I
decide.
was
have
gonna
to
let,
ask.
I was gonna let you read it, Anna. Before the Board of Commissioners for Lincoln County, Oregon, ordinance number 538, related to land use planning, amending Lincoln County Code, Chapter 1 regarding administration and declaring an emergency. I'm going to let Director Husing talk about, these were changes that have been in process for over a year. A lot of it's cleanup of nomenclature, a lot of it administrative cleanup essentially, but I'll let him describe more in detail.
I didn't expect to say good afternoon, but good afternoon. And so again, Anno Husing, I'm the director of the Lincoln County Planning Department, and delighted to be here and delighted to have this in front of you after quite a period of time. So in the past, as all of you know, it is quite, in effect, routine to amend our land use code because every time LCDC meets, and Commissioner Jacobson used to be on LCDC,
Yes,
right?
uh-huh.
Every time in the past when you met and promulgated a new rule, there was a
Oh, boy, we need to change this at the county level.
right. It was like, oh, what are we doing to the county planning department now, right? And the same thing with the legislature, right? That thankfully there aren't that many changes to the land use planning system, but you just never know. And it's incumbent on every planning department, both city and county, to make sure that our code reflects changes, because so much of what we do is delegated authority from the state of Oregon under the land use planning system and the building codes division and the onsite division, but we're only talking about the planning division right now. The genesis of this review is, let's understand, this is at the beginning of our land use code, there's an administrative section. And then, so and people rarely look at that, right? They're like, what can I do under TC or what can I do under AC or something like that? The substance of, and it's can or can't do. God, you have to hear me twice, right? The substance of what one has to do under the code is mostly in those later, the bulk of the plan. But the administrative section up front is, as you can imagine, terribly important. So we did not update. We have come before you with updates on other parts of the code, substantial updates as required and is certainly the thing to do. But on the administrative side, we have not changed and improved and updated the administrative section of our code. So we're only talking about the administrative section code here. So you have before you, and the public can see it as well, the proposed changes, and it's always great when you have a strikeout version, right? Because you can see, okay, this is what was there before, and here's what's being proposed. So in terms of anybody wanting to examine what we're doing, that is an outstanding way to do it, is to see the ordinance, and you can see the before and after proposed changes. But I want to just take a minute to say that So the origins of us saying it is time to finally update our administrative code occurred because what happened was, and Commissioner Miller was part of this because you were the PIO at the time, but recall during COVID, we didn't have very many planning commission meetings because we were all struggling. How do we even have a planning commission meeting? And if you remember, it seems like ancient history, but it wasn't that long ago. Then we all had to master Zoom technologies. And at one point, we had the mother of all land use applications and situations coming to us with Goal 18. We had a condo project and a major resort and other houses literally ready to crashing out on the beach, waiting for us to try to work the goal exception process. That was an exceptionally complicated process. It took an amazing team of people to make that work. And one of the individuals that we had who was a fresh set of eyes on our plan was Jerry Herbage, who did a tremendous job. And again, I will run out of superlatives if I talk about how great everybody performed during that exceedingly difficult situation. But Jerry came in also with a set of fresh eyes and said, what about this and what about that? Asked all the right questions, and then did a lot of the legal research working with Matt Spangler, our former planning director. So talk about two sets of really competent individuals doing this very inglorious task of having to go through the administrative section and find all the places that we really needed to make adjustments. So it was through the fresh set of eyes and the experienced set of eyes from Matt Spangler, Jerry Herbage, Matt Spangler, that the bulk of these code amendments were fashioned. And so, and Doug Holbrook also participated. John O'Leary was part of this. So I'm proud of the effort that got to this. I have to test now, though, your appetite for hearing or discussing the different things. I have what I consider a few highlights here. If you'd like me to talk about what's in the code itself, how it would change. But we could be here, there's a lot of stuff here, and each one of these things could go on and on. I don't want to do that. It's available for your observation. So, Mr. Chair, should I just sort of go ahead and make a few comments and then
When I throw it to the board too, do you have any particular desires? Because there is a lot of information.
There's a lot of information. This is our first reading, so
Mhm.
just a
Right.
reminder of that. We have time to go over stuff later as well. I didn't have any glaring questions when I read the document or anything, so
I didn't
I don't
either.
think I need a full debrief. I think I'm all right.
Okay, so and I also want to give a quick shout out to our planning commission who worked through the draft, and in particular, Commissioner Scarlett Kerr, who came to the meeting that night with having really done her homework and really made some outstanding, what about this and what about that stuff. So again, we've all been so fortunate because one of the things that we are doing, though, is changing the composition of our planning commission. And I think all of you know, for 10 years, I was on the planning commission. And we had, at least one of the changes, where we had this sort of clunky 12-member commission with even a spot for a high school senior that was never filled. I understand the idea of wanting to have
Don't know that
involvement.
that would be super popular, but.
Well, they don't necessarily, if they want to come, I think it would be great to have young people be involved, right? Our democracy needs young people to be participating and to experience it. So I welcome that and would make all sorts of room for them to be involved. But whether they actually need an official ex officio seat on the planning commission, somebody thought it was a good idea years ago. In all the years that I was on the planning commission, it says we've never done that. But we're proposing that we take down I use the term clunky. We had like full-time seats, and then we had these alternative seats. And if you remember, our planning commission is divided 3 regional sub areas, right? North, south, and central. And so each of the planning committee we had for the longest time, for decades, formal members and then alternates. And as a practical matter, by the time you got people there, virtually everybody, whether you were an alternate or not, you were a voting member of the planning commission because we needed their votes that night. So I love the simplicity of this. We're scrapping all of that and just going to a solid 9-member commission. And as a practical matter, it's not going to feel any different than what we've done in the past. But, and Jerry pointed out too, we need not just 5 members for a quorum. We need, so you can start a meeting, we need 5 votes to be able to pass something along to you guys or take action. So I think that was an important clarification. I like the change. I think and I think that what Jerry pointed out again during the goal 18 goal exception process was that, and then plus you'll see in the body of the text, new language of type 1, type 2, type 3, and type 4 permits. A lot of other jurisdictions were using that nomenclature, that frame of reference. And I would go to meetings and everyone would be using the type 1, type 2. And I'm going like, well, wait a minute, what's that? And I'd struggle to keep up with that. But it reflects existing practice, but it's much more clearly stated that there are things that the planning department can do in type 1 things that are ministerial, type 2 administrative. Again, our planning department can make a decision, but then it goes to opportunity for neighbors to appeal. Then there's just taking something directly to the planning commission would be a type 3. And then type 4 would be the more general legislative plan amendment process where you're actually amending the code and a whole different set of rules attached to that. So I like the fact that that's all in there now. There's a role also articulated for a pre-application conference. That wasn't spelled out before. That was always an opportunity for people to take advantage of that. But increasingly, we have applicants that are not professional developers, and they need a lot of coaching. And basically the opportunity, so the idea is, and there's apparently a practice that we have not experienced in this jurisdiction of some people literally not putting together quality applications, expect to be turned down at the staff level and at the planning commission level, and then hope to, in effect, leapfrog the process with an application that really shouldn't be approved, can't be approved, but hope that a body like yours would say, I don't know, I like the project, have it go forward. It's a strategy I have not experienced, but but this I think is another way to make sure that we have as much vetting with the applicant up front, so we can work with them to develop good applications. We don't ask for information we don't need. There was an individual made a comment about that recently. It's like, why would we do that? What we need, though, is to make sure applicants get through the process need to give us the information that we need so that lawfully we can get through a process. And sometimes they resist. But part of us, trying to front load these conversations rather than have them string out forever. So,
And Director Husing.
yeah, those are to me the major pieces. But go ahead,
there's
please.
Just searching this here, there's 102 instances of the word type. Eventually, will we see that language in the applications themselves at the planning department, or is that already consistent? Or
Well, to the extent that we routinely in an application cite the code, you'll see it.
okay,
And hopefully it we understood it internally. It may do a better job from an external thing by pulling it out. A whole lot of other jurisdictions use that nomenclature, so I'm happy as a clam to move in that direction, because also if we see, as I go to meetings and if I see LUBA opinions from something else, then I'll just be we'll all be that much more familiar with that way of phrasing it.
Okay.
There was one other interesting comment that was made at the plan, because it was, this is like kind of watching paint dry, right? Compared to the, I don't know what's more mundane, listening to audit stuff or although if you don't have a good audit, that's not very mundane. But at the same time, you don't see a room full of people here wanting to participate in this. Now, when we do the FEMA stuff, we may have to have an overflow room, but people have had a chance to review this. there was an individual, Cindy George made a point during the planning commission. She strongly suggested that we do not allow realtors to serve at all on our planning commission. Now, it's specified in Oregon law that you can have no more than 2 people from any one profession serving on a planning commission, including people in the development community. But, so we're just sort of echoing the law in this, and my, it's not pushback, but my response to that feedback is, I completely agree that we should be not, our planning commission should not be dominated by people that make their living in the real estate industry. However, having at least 1 or 2 of those folks there, they often provide a level of expertise that's very helpful. And one of our, to me, what heroic people that have served on the planning commission, Phil Spolnick, is a realtor. Phil has been on the planning commission forever. He was there to help develop the plan, and he's remarkably still, we really need to have a ceremony for him when he finally steps down from the planning commission, because it's really remarkable to have that kind of longevity and perspective. But again, people in that line of work have valuable things to add to the mix. They should not dominate the process, but they, but again, it's in our code now. It reflects the status of Oregon law. So I'm standing between you and lunch. And again, if any of, because this is just a first reading, we'd welcome, and I'm sure you will too. If anybody wants to take a look, you can, it's all here, right? The before and after, there doesn't take a sophisticated reading of this, because you can really see this is what it was and this is how it's changed. I love those strike through draft things. So again, welcome any more feedback from the public about this. It's there to see. And with that, I will yield the floor.
Well, that would put our next reading at, let's see, what date then on that?
It has to be 2 weeks out at least, so it has to be the 18th.
December 18th.
18th. Just to review here, so we're the 4th and the 18th of December. Okay, looks like our scheduled meetings. Well, I will review. Thank you.
Please.
I'm fine. Anything
Fine
we
for
need
now.
to-
Yeah, thank
Yeah.
you.
Me too.
All right.
Thank you.
Director Husing. Okay. And on to the first reading of ordinance number 539 regarding an ordinance amending Lincoln County Code Chapter 6.310 to provide for fees of certain county road right-of-way uses.
Thank you, Commissioners. Kristen Yule, County Council. So would you like the full text read or title only?
Title only.
Okay. Before the Board of Commissioners for Lincoln County, Oregon, ordinance number 539, regarding an ordinance amending Lincoln County Code Chapter 6.310 to provide for fees for permits for certain county road right-of-way uses. So this is related to a new state law that permits, that authorizes a permit fee for improvements. Usually they would be placed in the county road right-of-way. So that could be to maintain or repair water, gas, electric, usually by utility companies.
And broadband.
Yep. So we have proposed a permit fee, that's section 3. It's limited to a maximum of $500 this fiscal year. It's just to allow to regroup administrative costs for basically time county staff have to spend basically allocating these. Any questions?
No questions. I would
No.
just make a comment that this was a state rule change, I believe. I think in a previous meeting, our Public Works Director had stated they had an increase in 65 permits or something like this over the last several months. So I'm actually just really glad we have this tool, because those do take time and staff time
Sure.
to review and approve.
Yeah, and
Where's that coming
Uh,
from?
what is it? Yeah.
Oh,
okay.
okay.
Okay, our Public Works Director did send an email, and I hope that got distributed to both of you, but yeah, this is the first reading. I thought there were quite a few details in here that were interesting and that it could generate revenue of 10 to 20. So, I mean, that's also something good for us. So, but other than that, no, I have nothing else.
Nothing else either.
Commissioners, this will come back for a second reading also on December 18th.
Okay. All right. So that's coming back on the 18th. And where are we? Okay. So we're out of discussion and information. That brings us into reports, staff, Administrator Johnson, anything? County Council? No. Okay. And Commissioner reports.
I have a really brief one, just that I attended the AOC annual conference last week. I think the two of you did as well. Nice sessions on communicable diseases, best practices for community justice, and I also accidentally crashed the county council training and ended up taking public meetings law training while I was there. So
Good.
good conference. Nice to see everybody. Yep.
Let's see, Commissioner Hall.
I'll just be short and to the point. To the people of Lincoln County, thank you.
Yes. Let's see, I would just report that we received an innovation award from CIS at the association. So congratulations to everyone, HR,
For
legal.
risk
and-
management,
Yeah,
correct?
It's actually, it was directly for risk management for Gina Likas.
Wonderful. Yeah.
Yep, and I'm going to present that in December when she can actually attend the meeting.
Oh,
Oh,
good.
nice.
Okay.
oh, good,
Yeah.
good. Okay. So yeah, good conference. And that moves us to public comment. Anybody signed up in the room? Okay, no one in the room. Okay, let's go to virtual. Please use the raise hand function.
All staff, Commissioner.
Okay. So all staff and written comments.
Is attached to your agenda here.
Chair, if I could just point out one thing that's in the public comment, it is a letter from the Lincoln County Republican Central Committee thanking and congratulating our county clerk for how they conducted the election.
Very nice.
Good.
Nice. I agree with their letter.
And Kenneth, I submitted written comment, but I don't see it there.
I was told not to put that in the public comment section.
Okay, so the comment I submitted on, let's see, what was the date? 11/17 on Sunday. You were told not to put into written comments. Okay, can anybody expand on who or why?
County council told me not to put it in.
So he can include it if he wants to include it as a constituent. Is that how you're including it? Not in your role as commissioner, but in the capacity as a public
I'm just,
member.
just any means.
So constituent input is for public. So if you're acting in the capacity as a citizen, you can submit it, but not in the capacity as a commissioner.
Okay, well, then I would submit my public comment. I have it here, or my comment. It's a memo to you, my fellow commissioners and staff, submitted as my report then, if that's more
I
appropriate.
did receive the memo.
Yes,
You did?
yes, I did.
receive it.
Oh,
Yes.
good.
You just didn't get it.
Yeah, I did.
So are you
receive it.
are you submitting public input as
Um,
a citizen, or are you submitting it as a commissioner?
Either way, I just want it to be in the public record. Council, you'll.
Okay, so as a commissioner, you can submit reports, but for public input, that's for the public.
Okay. well,
So it
sounds
wouldn't
like-
be in the capacity as your role as commissioner.
So I will submit that as my report.
Okay, and again,
Okay.
reports are, our meetings have established reports are for updates of meetings that have been attended,
Okay.
legislative meetings that you're involved in, legislation. So
Yeah.
it's not for administrative matters. So just noted.
Okay, okay. So, but everybody understands this is my report. It is a memo. Now, you've got it. Should I resend that to you or what would
I've
you
got
like me
it.
to do?
Yeah, and I had received it as well.
Mhm.
Yeah.
Okay,
I believe I responded to it.
you did. Yeah, you responded to some of those things. Thank you. Okay. Moving on, anything else that is the rest for written? But we do have an executive session today, don't we? Okay,
So commissioners, when we adjourn into executive session, I do anticipate we are going to come back into regular session.
okay. All right. So we are going to jump into executive session. Do we need to? Oh, he's got the, okay.
Chair. you
Yes,
need to
and I
read it.
will cite ORS 192, pardon me, 66E regarding real property transactions. Like, come on up.
Are we up? Oh.
We're not, but do we not? We are resuming.
Okay, and we are back from executive session. We are resuming regular session. It is 12:33 at the clock in the room. Okay, next steps, anything we need to do? Council Yule? Want to take the first one?
Yeah, sure. I'll take the first one.
Okay.
And I say the address, correct, Ms. Yule?
Mhm.
Yes. Okay, I'll make a motion approving the sale of 1516 Northeast 14th Street in Lincoln City.
I'll second the motion.
All in favor, please say aye.
Aye.
Aye. Okay,
Mr. Chair,
Yes.
I'd move that Lincoln County transfer $305,451 in 804 settlement agreements to the city of Yahats for a property acquisition in accordance with the 804 settlement agreement.
I'll second the motion.
okay. All in favor, please say aye.
Aye.
Aye. Motion passes. Okay. All right, and our next meeting is scheduled for December 4th, 10 a.m. And following that on December 18th. And with, unless there's anything else? No?
No.
Okay. Everybody have a wonderful holiday and we are adjourned.
Thank you.